Welcome back to the deep dive, where we cut through the clutter and get right to the heart of complex topics. And trust me, today's topic is a fascinating one.
Yeah, today we're going to be taking a deep dive into the world of digital finance, specifically Bitcoin.
And a lot of people hear Bitcoin and they think, oh, that's so volatile, it's risky. But what we're going to be looking at today is the long-term potential of owning a small fraction of a Bitcoin.
Right, we're not talking about going all in on Bitcoin.
No.
We're going to look at what could happen if you just owned a tiny piece of it, specifically 0.01 BTC, which in 2025 is only about 700 bucks.
That's right, 700 US dollars.
And we're going to be using a fascinating study, Análisis Financiero Estratégico en Activos Digitales, to try and figure out if that $700 could realistically grow to $100,000.
And I really like that the source material isn't just like, some wild speculation.
Right.
It's rooted in some pretty strategic financial analysis. We're going to be looking at projected growth, the assumptions behind it, and maybe even more importantly, the critical questions that you should be asking yourself if you're even thinking about this kind of long-term digital asset holding.
So before we get into those critical questions, let's start with the basics.
Okay.
The source material clearly lays out that our starting point is 0.01 Bitcoin. As of 2025, Bitcoin is trading at about $70,000. So we're starting with about 700 bucks.
$700.
Yeah. And the big question that we're exploring is, can that $700 turn into $100,000?
$100,000, that's a big jump.
It is. And for that to happen, for that 0.01 Bitcoin to be worth $100,000, the price of a single Bitcoin would have to reach $10 million.
Wow, $10 million of Bitcoin. That's a huge number. And to get there, we need to talk about this idea of compound interest.
Exactly. Compound interest.
Huh.
It's a fundamental concept in finance.
Okay.
And it plays a crucial role in this analysis because it helps us understand how an asset's value can increase significantly over time, assuming, of course, that there's consistent growth. It's the idea that your gains earn more gains, and those gains earn even more gains.
Right. And it's kind of like that, snowball effect, right? It just keeps getting bigger and bigger as it rolls down the hill.
Exactly. Now, how do we calculate that?
Well, the source uses a pretty straightforward formula. It's FV equals PV times 1 plus R raised to the power of N. And I know that sounds kind of complicated, but it's really not that bad.
No, it's not.
FV, that's future value. That's our $100,000 target, right?
Right.
PV is present value. That's our starting point, $700. R represents the annual growth rate, like how much Bitcoin goes up each year on average. And N is the number of years it takes to reach that future value.
Right. And this formula is essential because it shows us the potential of those earnings compounding over time.
Yeah.
So the source material gives us a bunch of different scenarios based on different average annual growth rates for Bitcoin.
Right.
For instance, if Bitcoin were to see an average annual growth rate of 20%, then it would take an estimated 29 years for your 0.01 Bitcoin to turn into that $100,000.
Okay, 29 years. Now, that's a pretty long time, especially in the world of technology. Things change so quickly. So when we talk about this 20% average annual growth rate, thinking back over the last decade of Bitcoin, has it consistently grown at 20% per year? Were there years where it grew a lot more, years where it maybe even went down?
That's a really important point to consider because, yeah, you're right. Bitcoin has definitely not been a smooth, steady ride. There have been periods of explosive growth, but also times where it's crashed pretty hard.
Right, exactly.
And the study actually emphasizes that these projections, they're not guarantees. It's not like a savings account at a bank.
Right.
They're just giving us a framework for thinking about the possibilities based on different growth assumptions.
Exactly. And it really highlights how important it is to kind of dig into that historical data, see how Bitcoin has performed in the past, understand what drove those big swings up and down, so you can start to form your own opinion about what a realistic growth rate might be going forward.
Exactly. And the source material, it actually encourages us to do that, to really dig into those historical trends and not just take these projections at face value. Now, the study goes on to present other scenarios with higher growth rates. For example, if Bitcoin were to grow at an average annual rate of 25%, then the time frame shrinks to 24 years.
That's pretty interesting. So even a small increase in the annual growth rate, just 5%, shaves off 5 years. It really shows how sensitive those long-term projections can be, even small changes in the growth rate.
Yeah, that's the power of compounding at work, right?
Exactly.
And the study goes on to outline a few other scenarios. At a 30% annual growth rate, we're looking at about 20 years. At 40%, the time frame drops to around 16 years. And if Bitcoin were to achieve a really substantial 50% average annual growth, It could take as little as 13 years for that initial $700 investment to reach $100,000.
So to sum it up for our listeners, if Bitcoin could somehow maintain a 30% average growth per year over the next 2 decades, that initial $700 investment could turn into $100,000. But again, it's really important to stress that these are just projections based on assumed growth rates. It's not a certainty by any means.
Yeah, and the source material itself acknowledges that, these numbers don't exist in a vacuum. It moves into a section called Actividades en classe and another section called Discussion Critica, which basically means like classroom activities and critical discussion. And it prompts us to start thinking about these Bitcoin growth scenarios in a much broader, more realistic context.
Okay, so like what kind of things should we be considering?
Well, one of the first things it asks us to consider is how these potential Bitcoin growth scenarios compare to more traditional investments, things like ETFs, golds, stocks. Now, we're not going to go into a deep dive comparison of all those different asset classes today, but the source material really wants us to think about this. Like, how do the potential returns and the risks of Bitcoin at these different growth rates stack up against what you might expect from more established, maybe more familiar investments?
That's a really important question because, like we said earlier, Bitcoin can be really volatile. So, yeah, the potential upside at these growth rates could be way higher than a typical ETF or a stock, but the risk of losing a big chunk of your investment is also much higher.
Exactly. You got to weigh those pros and cons, right? Yeah. The source material also digs into Bitcoin's history, specifically looking at its halvings. Now, a halving is a built-in mechanism in Bitcoin, where roughly every 4 years, the reward for mining new Bitcoins gets cut in half.
Okay, and why do they do that? What's the purpose of that?
Well, the idea is to control the supply of Bitcoin, make it more scarce over time. And historically, these halvings have tended to lead to price increases. So it's definitely something to be aware of when you're thinking about the long-term growth potential of Bitcoin.
Right, because it suggests that there might be these kind of like built-in cycles of scarcity and price appreciation.
Exactly. And the source material wants us to think even broader than that. It says, think about potential correlations between these halvings and, broader economic trends like inflation or major global events or like groundbreaking technological changes. It's not just about Bitcoin in isolation. It's about how all these external forces could potentially impact its price.
Yeah, that's so important because the world is always changing. There could be some big global event that sends Bitcoin's price soaring, or there could be some kind of regulatory crackdown that sends it plummeting. It's all connected.
Exactly. And you can't predict the future, but you can try to be aware of these different forces at play and how they might interact. Now, another interesting concept that the source material introduces is the idea of a plan d'accumulation.
Okay, what is that?
It basically means like an accumulation plan, right?
Yeah.
It's the idea of consistently investing a set amount of money into Bitcoin over a long period, regardless of what the price is doing at any given moment.
So like instead of trying to time the market and buy low, sell high, you're just like steadily accumulating Bitcoin over time.
Exactly. And this strategy is often called dollar cost averaging, and it can be a really effective way to kind of smooth out the volatility of an asset like Bitcoin. Instead of trying to perfectly time the market, which is almost impossible, you're just spreading out your purchases over time.
Makes a lot of sense, especially with something as volatile as Bitcoin. Now, the source material also raises a really critical question. Is Bitcoin a truly sustainable store of value over these long time horizons?
Yeah, and this gets to the heart of one of the biggest debates around Bitcoin. Can it truly hold its value over decades, like gold has done for centuries?
Right, because some people argue that Bitcoin is like digital gold, a safe haven asset that will protect your wealth against inflation and economic turmoil. But others say that it's still too young, too untested, too volatile to be considered a reliable store of value.
Exactly. And the study doesn't pretend to have all the answers, but it challenges us to think critically about these different perspectives and to weigh the evidence. Now, one of the other big questions the source material poses is, what external factors could really impact Bitcoin's growth, either positively or negatively?
Right, because we were talking earlier about those global events, but what are some specific things that could really move the needle on Bitcoin's price?
Well, the study suggests that things like government regulations around the world could have a huge impact.
Yeah, makes sense, right? Because some countries are super Bitcoin friendly and others are, cracking down on it.
Right, exactly. And it also suggests that adoption by major institutions, like banks and pension funds, could be a major driver of growth. If these big players start investing heavily in Bitcoin, That could really legitimize it and send the price soaring.
But on the flip side, if governments get really restrictive or if big institutions stay away from Bitcoin, that could have the opposite effect.
Yeah, absolutely. And the study even goes so far as to suggest that a new cryptocurrency could emerge that offers significant advantages over Bitcoin, potentially overtaking it as the dominant player in the space.
That's something I hadn't really considered, but it makes sense, right? I mean, technology is constantly evolving. Who's to say that Bitcoin will still be king of the hill in 30 years?
Exactly. It's a really thought-provoking question, and it highlights the inherent uncertainty of investing in such a new and rapidly developing asset class. Now, to wrap things up, let's zoom back out and look at the big picture. What are some of the key takeaways from this Análisis Financiero Estratégico en Activos Digitales, specifically as it relates to this long-term journey from 0.01 Bitcoin to $100,000?
Well, I think one of the most important takeaways is that Bitcoin, as a digitally scarce asset, does present a very compelling case for long-term financial growth. The calculations suggest that even a modest initial investment like $700 could potentially reach a substantial value like $100,000 over a significant period of time, maybe 2 to 3 decades, if those average annual growth rates in the range of 20% to 30% are sustained. But I think it's also important to remember that this isn't about predicting the future with any certainty. It's about strategic planning. And more than that, it's about understanding the inherent uncertainties involved in any long-term investment, but especially in something as new and dynamic as Bitcoin.
Yeah, and the source material really drives that point home. It's all about integrating those financial calculations with strategic thinking about market dynamics, a critical analysis of both the potential rewards and the risks involved, and ultimately making informed decisions based on your own individual risk tolerance and your long-term financial goals.
So going back to our initial question, is it realistic for zero point zero 0.01 Bitcoin to become $100,000?
The study suggests that yes, it's a possibility, but it hinges on some pretty big assumptions.
Huge assumptions.
We're talking about substantial and consistent growth over a long period, 2 to 3 decades, and all while navigating a constantly changing technological and economic landscape.
Right, exactly. So I think it's really up to each individual listener to look at those different growth scenarios that we talked about and decide for themselves what feels plausible, what feels overly optimistic. Do you think Bitcoin can realistically average a 20% growth rate per year for the next 3 decades? Or do you think a higher rate, like 40% or even 50%, is more likely or maybe even unlikely?
Right, and that's where your own individual assessment of Bitcoin's future potential and the broader economic and technological landscape really comes into play.
Absolutely. And if you're interested in diving deeper into this topic, the source material recommends checking out some great resources. Things like The Bitcoin Standard by Saifedean Ammous. That's a really great book for understanding the kind of like economic underpinnings of Bitcoin. It also recommends following on-chain analytics from platforms like CoinDesk and Glassnode because that gives you a sense of what's actually happening on the Bitcoin network. And of course, it encourages you to explore historical price data, see how Bitcoin has performed in the past on platforms like NIA Finance or TradingView.
And don't forget the OG resource, the Bitcoin White Paper by Satoshi Nakamoto.
Yeah.
It's like the founding document of Bitcoin, and it's still incredibly relevant today.
Absolutely. And I think that's a really important point because as much as the world of Bitcoin and cryptocurrency has evolved over the last, 15 years, the fundamental principles laid out in that white paper are still very much at play.
Yeah, and I think that's what makes this whole topic so fascinating, right? Is this blend of cutting-edge technology, financial innovation, and this kind of like philosophical debate about the nature of money and value.
Yeah, for sure. And the source material ends with a really inspiring quote. It's in Spanish. It says, Invertir en el futuro no es cuestión de dinero, sino de visión. Porque el capital más valioso no se guarda en una billetera, sino en la mente que decide qué hacer con él. And what that basically means is that investing in the future is not just about money, it's about vision. The most valuable capital isn't what's in your wallet, it's the way you think about the future and the decisions you make with the information that you have.
I love that. It's so true. It's not just about the numbers. It's about your perspective, your mindset.
Exactly. All right, well, on that note, thanks for joining us for this deep dive into the long-term potential of 0.001 Bitcoin. We hope you found it insightful and thought-provoking. We'll catch you next time on The Deep Dive.